Hello, everyone. The first thing to note here is that NiSource's power agreement with Alphabet matters, but the exact contract length has not been publicly disclosed yet. That means this news is clearly important, but at this stage, it should not be overinterpreted. Even so, the market reacted for a reason. NiSource announced a long-term power supply agreement with an Alphabet subsidiary for a large data center project in northern Indiana. At the same time, it also expanded its existing agreement with Amazon to move power delivery forward, and that is what makes this story more than just another utility contract headline. This matters because big tech's AI data center expansion is no longer just about buying more servers. It is now moving into a phase where companies are trying to lock in power itself through long-term structures. But there is also an important caution point. Based on the public reporting so far, the exact contract duration for the Alphabet agreement has not been disclosed. It has only been described as a long-term energy supply agreement. The same goes for Amazon. The latest announcement says the previous agreement was expanded, but the precise duration and terms of that expanded portion have not been fully detailed in public yet. So at this point, there are really two confirmed facts. First, NiSource has started to secure real data center power demand from big tech. Second, the full details of the structure are still not public, and that is exactly why this story matters. The market is no longer just asking whether power is important. It is starting to ask, who can actually connect power to AI data centers, and who can do it in a structure that works politically and regulatorily? NiSource said this demand would be handled through its GenCo structure. In simple terms, that means carving out large data center load and supplying it through dedicated generation and market-based resources instead of pushing the burden into the standard utility customer base. That tells us something important. AI beneficiaries may no longer stop at GPUs, semiconductors, and servers. They may now extend into the long-term revenue structures of utilities as well. But there is still a clear counterargument. Just because the market is putting a premium on NiSource now does not automatically mean it is a long-term AI winner. Why not? Because based on what is publicly known so far, we still do not fully know how long these contracts really are, how profitable they may be, and whether this structure can be repeated across other customers and regions. There is also still a regulatory layer here. From here, the bigger issue may not be whether a utility can sign a contract, but whether it can actually get power connected through regulation, grid constraints, and local resistance. So yes, this is a bullish signal. But it is also still an early-stage story that needs more verification. That is why this should not be reduced to one simple line like, NiSource is an AI utility winner. There are really two things investors need to watch. First, how quickly these long-term power agreements actually turn into revenue and earnings. Second, whether the premium now being placed on the stock can hold up once the undisclosed contract terms become clearer. So the real issue here is not just whether NiSource signed a big tech deal. The real issue is whether this kind of power contract structure is repeatable, and whether the economics are strong enough to justify the new premium. So the takeaway is simple. The NiSource story shows that AI beneficiaries may be expanding from semiconductors into power contracts, but at the same time, because the contract length and detailed economics are still not fully public, investors also need to consider the possibility that market expectations are running ahead of fundamentals. And the simplest way to say it is this. NiSource is no longer just a traditional utility. It is becoming a possible beneficiary of AI data center power demand. But at this stage, investors still need to confirm the real substance and repeatability of that story.